Hello everyone and welcome. In today's Texas Real Estate Study Guide 199 Questions and Answers practice session, we'll go through 199 updated questions designed to help you prepare for the exam. When each question appears, pause the video first, choose the answer you believe is correct, then comment your answer below before resuming the video to see the correct answer. Keep track of your score as you move through the questions and let's get started. Flashcard 1. Broker. Pause and think of the answer before the reveal. The answer is a person who, in exchange for a commission or other valuable consideration or with the expectation of receiving a commission or other valuable consideration, performs, for another person one of the following acts, including helping another person to conduct a real estate transaction. Flashcard 2. TREC. Pause and think of the answer before the reveal. The answer is, the Real Estate License Act. TREC. A broker is the agent for the buyer or the seller, or in some cases, both parties, in negotiating the sale, purchase, or renting of property. A broker is authorized to operate a real estate brokerage business. Flashcard 3. Sales agent. Pause and think of the answer before the reveal. The answer is a licensee employed by or associated with a broker who conducts brokerage activities on behalf of the broker in return for a fee or a commission. They perform real estate transactions under the ultimate supervision of the broker. Flashcard 4. SEC. Pause and think of the answer before the reveal. The answer is Education Standard Advisory Committee. The function is to regularly review and revise curriculum standards, course content requirements, and instructor certification requirements for core and MCE courses. Committee consists of 12 members, 7 members who have been engaged in the practice of real estate, 4 members who are real estate instructors or owners of real estate, 1 member who represents the public. Flashcard 5. Economic characteristics of land. Pause and think of the answer before the reveal. The answer is scarcity, modification, fixity, and situs. Flashcard 6. Scarcity. Pause and think of the answer before the reveal. The answer is a shortage of land in a given geographical area where there is a great demand for land. Flashcard 7. Modification. Pause and think of the answer before the reveal. The answer is also called improvements, are man-made developments made to real property. Modifications greatly influence land use and value. They can be anything from apartments to airports, schools to sewers, farms to factories. Flashcard 8. Fixity. Pause and think of the answer before the reveal. The answer is also called investment permanence, means that land, buildings, and other improvements require long periods of time to pay for themselves. This is why an investment in real estate is regarded as a fixed or sunk cost. Flashcard 9. SIS. Pause and think of the answer before the reveal. The answer is or location preference refers to a location from an economic rather than a geographic standpoint. Residential, commercial, and industrial properties have different location preferences for different reasons. Is the reason why house lots on street corners, corner offices, and apartments with commanding views are valued more highly than identically sized lots in less preferred locations. Flashcard 10. Non-homogeneity. Pause and think of the answer before the reveal. The answer is also known as heterogeneity. Non-homogeneity means that no two parcels of land are exactly alike because no two parcels of land can occupy the exact same space on the globe. Flashcard 11. In the United States, there are 7 sources of law that affect the ownership and transfer of real estate. Pause and think of the answer before the reveal. The answer is United States Constitution, laws passed by the United States Congress, federal regulations adopted by the various agencies and commissions created and authorized by Congress, state constitutions, laws passed by state legislatures, ordinances passed by local governments such as cities, towns, and other jurisdictions' court decisions. Flashcard 12. In 1939, the first regulation for real estate was passed, called Pause and Think of the Answer Before the Reveal. The answer is Texas Real Estate Dealers Act. The act was renamed the Real Estate License Act in 1995. Flashcard 13. The purpose of the U.S. Constitution and the individual state constitutions is Pause and think of the answer before the reveal. The answer is to establish the rights of the citizens of the United States and to outline the limits of government. The Fifth Amendment to the Constitution is particularly applicable to property rights where it guarantees that a citizen will not be deprived of property. The 14th Amendment, which was written and adopted to address citizenship of former slaves after the Civil War, also allowed for Congress to pass the federal fair housing legislation under its civil rights protections. The 14th Amendment applies the Fifth Amendment guarantees to the states as well as federal law. Flashcard 14. An ordinance is Pause and think of the answer before the reveal. The answer is legislation that is passed by a local municipality and binding on the citizens of that municipality. As they say with a variety of policies, all real estate is local. Here are some sample zoning ordinances from around the state of Texas: City of Dallas, City of Austin, City of El Paso, City of Waco, City of Brownsville, City of Houston. Flashcard 15. Legal remedies: courts of law versus equitable remedies, courts of equity. Pause and think of the answer before the reveal. The answer is because some remedies in common law were considered too harsh, courts of equity were created to provide relief to applicants under equitable principles. Equity has the ability or flexibility to do what is considered fair and equal, even when the letter of the law would dictate otherwise. Federal bankruptcy courts traditionally operated as courts of equity. Flashcard 16. Fair Housing Act. Pause and think of the answer before the reveal. The answer is it is unlawful to discriminate on the basis of race, color, religion, sex, handicap, familial status, or national origin. Legislation that is virtually identical to the federal act. At the state level, the Texas Workforce Commission Civil Rights Division administers and enforces the TFHA. Flashcard 17. Equal Credit Opportunity Act. ECOA. Pause and think of the answer before the reveal. The answer is administered by the Consumer Financial Protection Bureau, CFPB. This law was enacted in 1974 and makes it unlawful for any creditor to discriminate against any applicant with respect to any aspect of a credit transaction on the basis of race, color, religion, national origin, sex, marital status, or age, provided the applicant has the capacity to contract, to the fact that all or part of the applicant's income derives from a public assistance program, or to the fact that the applicant has in good faith exercised any right under the Consumer Credit Protection Act. If a financial institution fails to comply, they can be subject to civil liability for actual and punitive damages in individual or class actions. Liability for punitive damages can be as much as $10,000 in individual actions, and the lesser of $500,000 or 1% of the creditor's net worth in class actions. Flashcard 18. Real Estate Settlement Procedures Act. RESPA. Pause and think of the answer before the reveal. The answer is also administered by the CFPB and was designed to ensure that buyers and sellers in residential real estate transactions involving a new first mortgage loan have knowledge of all of the closing costs. Flashcard 19. Professional Organizations. Pause and think of the answer before the reveal. The answer is usually a not-for-profit organization that seeks to further a particular profession and the interests of individuals engaged in that profession. Flashcard 20. National Association of Realtors, NAR. Pause and think of the answer before the reveal. The answer is further a particular profession and the interests of individuals engaged in that profession. By far the largest and most well-known voluntary trade association for real estate sales agents and brokers is the National Association of Realtors Registered, which was founded in 1908. This is definitely a trade group maintained for members and their interests, and not so much for consumers, although they do provide limited information in that regard. Flashcard 21. Market value and market price. Pause and think of the answer before the reveal. The answer is, the market value of a property is the amount the property, in its current state, should sell for on the open market. The market price is the price that a property actually sells for. Flashcard 22. Assessed value. Pause and think of the answer before the reveal. The answer is the value established for tax purposes by local municipalities, commonly related to the market value and is often a percentage of market value. Flashcard 23. Estimated sales value. Pause and think of the answer before the reveal. The answer is found by examining the sale price of comparable properties in the same area that recently sold. Approximation of the sale price for that property that can be expected at that time in that market and often is the same as the assessed value. Flashcard 24. Investment value. Pause and think of the answer before the reveal. The answer is the value of the property to a particular investor using that investor's qualifications of what adds or subtracts value. Flashcard 25. Replacement value. Pause and think of the answer before the reveal. The answer is the amount of money that would be required to completely replace a particular structure or building. Flashcard 26. Liquidation value. Pause and think of the answer before the reveal. The answer is an estimate of the amount of money that could be gained if the property was quickly sold in a low-demand market. The liquidation value becomes relevant if the property has to be auctioned or is being sold after foreclosure. Flashcard 27. Supply and demand. Pause and think of the answer before the reveal. The answer is essentially the quantity of goods being offered for sale within the market at any particular time is the desire for those goods, in this case, houses, that consumers are able and willing to buy at a particular price. Flashcard 28. The business cycle. Pause and think of the answer before the reveal. The answer is a constant expansion and contraction of the economy for a certain area, from an entire country, down to a specific jurisdiction. Expansion growth, or a growing economy recession, a contraction, or generally slowing down of the economy depression, the lowest point of the business cycle revival, the recovery period after a depression where the economy is heading back into expansion. Flashcard 29. What is the primary purpose for real estate licensing laws? Pause and think of the answer before the reveal. The answer is to protect licensed brokers and sales agents from unfair or improper competition, to set out minimum standards and qualifications for licensing brokers and sales agents, to protect the general public during real estate transactions from dishonest or incompetent brokers and sales agents. Flashcard 30. The Texas Real Estate Commission. Pause and think of the answer before the reveal. The answer consists of 9 members appointed by the governor with the advice and consent of the Senate as follows. 1. 6 members who have been engaged in the brokerage business as licensed brokers as their major occupation for the 5 years preceding appointment, and 2. 3 members who represent the public. Each member of the commission must be a qualified voter. C. Appointments to the commission shall be made without regard to the race, color, disability, sex, religion, age, or national origin of the appointee. Flashcard 31. Texas Trade Association. Pause and think of the answer before the reveal. The answer means a cooperative and voluntarily joined statewide association of business or professional competitors in this state designed to assist its members and its industry or profession in dealing with mutual business or professional problems and in promoting their common interest. Flashcard 32. Per 1101.2051b, information or material prepared or compiled by the Commission in connection with a complaint, investigation, or audit may be disclosed. Pause and think of the answer before the reveal. The answer is to the respondent of the complaint. Flashcard 33. Real property, often referred to as real estate. Pause and think of the answer before the reveal. The answer is land and any structures attached directly to that land. This includes improvements such as buildings, roads, and fences, but also includes natural resources like water, minerals, and crops. This means that oil, gas, and timber qualify as real property because they are considered a part of the land. Real estate is generally classified in the following 6 categories: residential, commercial, industrial, mixed-use, agricultural, special purpose. Flashcard 34. Emblements. Pause and think of the answer before the reveal. The answer is annual cultivated crops such as vineyards, fruit orchards, hay fields, and vegetable crops require labor and are planted each year. Hay are treated as the tenant's property rather than the landowner's. This implies the tenant's right for her harvest. That means, basically, that farmers are entitled to the fruits of their labor. Even if a landowner terminates a tenant's lease in the middle of a growing season, the tenant still owns the crop and shall be granted legal access to the land to harvest their crop. Flashcard 35. Severance. Pause and think of the answer before the reveal. The answer is: first, it applies to joint tenancy, a form of shared ownership. Second, severance describes the cutting and removal of anything attached to the land, such as timber or crops. Third, severance is used when the government exercises eminent domain. Flashcard 36. Trade fixtures. Pause and think of the answer before the reveal. The answer is a business or trade-related item attached to a rental building by a business tenant. These items such as booths, bars, display cases, and lights are used for the storage, handling, and display of stock for a business. Flashcard 37. Fixtures. Pause and think of the answer before the reveal. The answer is a physical object that has been attached to a piece of land or other structure, so that the object is now legally considered real property. Fixtures have a hybrid nature since they were once personal property, but are transformed into real property. Disputes can arise when determining if an object is a fixture. Since no clear line can be drawn between what is and what is not a fixture, there are 5 tests which work to alleviate confusion. 1. Manner of attachment. 2. Adaptation of the object. 3. Intention of the installer. 4. Existence of an agreement. And 5. Relationship of the parties. Flashcard 38. Manufactured homes. Pause and think of the answer before the reveal. The answer is the ruling authority for manufactured homes, sometimes called mobile homes, in Texas. Texas allows that they may be considered real estate under certain circumstances. In order for an owner to be able to treat their home as real property, see the first bullet point above. The home must be physically attached to land owned by the owner of the manufactured home through a deed or a contract for deed, or to land leased to the owner of the home under a long-term lease. Flashcard 39. Housing cooperatives. Pause and think of the answer before the reveal. The answer is a type of cooperative, often an incorporated entity that owns real property, usually residential buildings. Members, by virtue of owning shares in the cooperative, are granted the right to occupy one of the units in the building. Since the resources of each member are pooled, the buying power of the organization is leveraged, which lowers the cost to members for services and products associated with home ownership. Members also can control who can occupy units in a cooperative-owned building. Flashcard 40. Townhouses and row houses. Pause and think of the answer before the reveal. The answer is multiple physical houses are combined into a single architectural building. Each unit owner owns an identified plot of land and the building affixed to it, but that building is physically part of a larger building that spans lots. There is a continuous roof and foundation, and a single wall divides adjacent townhouses. It is essentially under contract to the townhouse owners to maintain the parts of the building that are hard to divide. Even the walls between townhouses are usually outside the purview of the HOA, being jointly owned and maintained by the owners of the townhouses on either side. Like the condominium, the townhouse complex often has common areas for roads, parking, clubhouses, and such. A row house is like a townhouse in that they share at least one common wall and a roof. Some use the term interchangeably, but row houses are in a row and townhouses are multiple story with no additional residential units above or below. Flashcard 41. A planned unit development PUD. Pause and think of the answer before the reveal. The answer is a type of building development and also a regulatory process. As a building development, it is a designed grouping of both varied and compatible land uses, such as housing, recreation, commercial centers, and industrial parks, all confined within a particular development or subdivision. One characteristic of these developments is the choice of varied housing options, anything from apartments to single-family homes to townhouses and condos. Flashcard 42. Converted use property. Pause and think of the answer before the reveal. The answer are common in urban areas where existing structures used for one purpose, such as factories, warehouses, or office buildings, are converted into residential use either as rental apartments or condominiums. Flashcard 43. Retirement homes and communities. Pause and think of the answer before the reveal. The answer is address a housing option for the large number of baby boomers who are retiring. These units are either apartments and condos or attached single-family residences in communities that also provide shopping, entertainment, recreation, and medical services, and that can provide graduated care as the residents get older and potentially require more care in their homes. Flashcard 44. Mixed-use developments. Pause and think of the answer before the reveal. The answer is combine condos and apartments with restaurants, shopping, and recreation in one building or multiple units, generally in an urban or suburban area, that also provide access to mass transit. Usually these developments are pitched to urban professionals, not retirees or young families. A hallmark of mixed-use developments is that they are self-contained. Flashcard 45. Manufactured or mobile homes. Pause and think of the answer before the reveal. The answer is personal property, built off-site, and then, generally, trailered to the owner's home sites where the homes are attached to a foundation in a site leased from the manufactured home park owner. Generally, there are common facilities available for the homeowners to share in the use of, such as green space or even recreational venues, but the land underneath remains the property of the park owner. Flashcard 46. Modular or prefab homes. Pause and think of the answer before the reveal. The answer is also factory-built, like manufactured homes, but instead of being put together in the factory, the pieces are delivered and construction is finished on the actual home site. Once the pieces are in place, the home is built just like any other stick-built construction. In these cases, the homeowner owns the house and the land. Flashcard 47. Timeshare homes. Pause and think of the answer before the reveal. The answer is usually purchased as a second home or vacation home. The way it works is that several owners purchase a property together and each is entitled to use the property for certain periods throughout the year. Flashcard 48. 5 elements of location. Pause and think of the answer before the reveal. The answer is employment opportunities, cultural opportunities, governmental structure, social services, transportation. Flashcard 49. Tax deduction. Pause and think of the answer before the reveal. The answer is lowers a taxpayer's taxable income. Flashcard 50. Tax credit. Pause and think of the answer before the reveal. The answer is a direct reduction in the amount of taxes that a taxpayer must pay. Flashcard 51. Income tax. Pause and think of the answer before the reveal. The answer is a governmental tax levied at a wage earner's total personal income. Flashcard 52. Points. Pause and think of the answer before the reveal. The answer is fees charged by the lender to buy down the interest on a loan, with each point generally equal to 1/8 or 1/4 depends on the lender of 1% of the loan amount. Flashcard 53. Mortgage interest. Pause and think of the answer before the reveal. The answer is the percentage charged on a mortgage that must be paid above the principal amount. It is essentially the cost of the borrowed money for the loan. Flashcard 54. Loan origination fee. Pause and think of the answer before the reveal. The answer is charges from a lender upon entering a loan agreement that cover the cost of processing the loan administrative needs, setting up the loan file, creating the mortgage itself, preparing documents, lender paperwork, underwriting the loan, general service charge. Generally, this is a flat fee that is payable at the time of the loan closing and ranges from 0.5–1% of the loan amount for FHA and VA loans and up to 2% for other types of loans. Flashcard 55. Capital gains. Pause and think of the answer before the reveal. The answer is the increase in the value of a capital asset, such as real estate or stocks, fine art, luxury vehicles, at the time of sale. The capital gains are the profit. A capital gain is only realized at the time of sale, even if the investment rises in value during the time of ownership. Capital gains are reported on the income tax portion of a tax return. Short-term capital gains are defined by the IRS as assets sold within a year of purchase, and long-term capital gains are those held over a year from the time of purchase to sale. Short-term capital gains are taxed similarly to income, while long-term capital gains are generally taxed at a lower rate. Flashcard 56. Capital loss. Pause and think of the answer before the reveal. The answer is the difference between a higher purchase price and a lower selling price. Basically, the owner/seller takes a loss on the asset, for our purposes, the real estate. Per the IRS, if a taxpayer's capital losses exceed his or her capital gains, the difference can be deducted on the taxpayer's tax return. Flashcard 57. Property taxes. Pause and think of the answer before the reveal. The answer is levies on real estate that the owner is required to pay to the governing jurisdiction where the property is located. Generally, the tax is based on the value of the property and land. Flashcard 58. Estate tax. Pause and think of the answer before the reveal. The answer is a tax on your right to transfer property at your death. It consists of an accounting of everything you own or have certain interests in at the date of death, referred to Form 706 PDF. The fair market value of these items is used, not necessarily what you paid for them or what their values were when you acquired them. The total of all of these items is your gross estate. The includable property may consist of cash and securities, real estate, insurance, trusts, annuities, business interests, and other assets. Flashcard 59. Fair market value. Pause and think of the answer before the reveal. The answer is the price at which the property would change hands between a willing buyer and a willing seller, neither being under any compulsion to buy or to sell, and both having reasonable knowledge of relevant facts. Flashcard 60. Specific benefits for homeowners. Pause and think of the answer before the reveal. The answer is mortgage interest. The interest a homeowner paid for their first and second homes was once a standard deduction available to homeowners, but was eliminated from deductions by the Tax Cuts and Jobs Act in 2017. Property taxes/real estate taxes. In the year that a homeowner pays property taxes, they are deductible, just the taxes, though not any accompanying preparation costs to the taxpayer. Home improvement loan interest. Usually the interest on up to $100,000 in debt is fully deductible. Exceptions apply, such as if the loan is worth more than the value of the property. See tax rules for specifics. This is not to imply that home improvement expenses are tax deductible. However, Any improvements made to a property should increase the asking price at sales time and thereby diminish the capital gains tax. Energy efficiency or renewable energy tax credits. There are specific requirements for both of these tax credits, so the homeowner should investigate if he or she is planning to claim these benefits after making these types of improvements. Flashcard 61. First-time homebuyer tax benefit. Pause and think of the answer before the reveal. The answer is buyers may withdraw up to $10,000 from an IRA without penalty to help with the purchase of a home, and others' relatives, friends may contribute up to another $10,000 without penalty, for up to $20,000 total. Flashcard 62. The Taxpayer Relief Act of 1997. Pause and think of the answer before the reveal. The answer is introduce the regulation that taxpayers are eligible to exclude certain amounts in capital gains on their principal residence upon its sale or exchange. This exclusion is available only every 2 years, it is not taken annually. Flashcard 63. Specific requirements. The Taxpayer Relief Act of 1997. Pause and think of the answer before the reveal. The answer is a married couple jointly filing may exclude up to $500,000 in capital gains upon the sale of the asset. An individual may exclude up to $250,000 in capital gains upon the sale of the asset. The 2-year requirement translates to 2 years of the previous 5, not necessarily continuously, and once the 2 years are fulfilled, the homeowner can be living elsewhere at the time of the capital gain. A principal residence may be a house, houseboat, mobile home, cooperative apartment, or condominium. If a homeowner fails to meet the 2-year rule because of an employment change, health, death, natural or man-made disaster, an act of war or terrorist attack, divorce or illegal separation, or other unforeseen circumstances, they are able to exclude the fraction of the $500,000 or $250,000 whichever the taxpayer is eligible for, that is equal to the fraction of 2 years that are not met. If persons are filing jointly but not sharing the residence, an exclusion of $250,000 is available on a qualifying sale or exchange of the principal residence of one of the spouses. If a person who is eligible for an exclusion marries someone who has used their exclusion in the last 2 years, the newly married person who qualifies will only be eligible for $250,000. Flashcard 64. Estate tax exemption. Pause and think of the answer before the reveal. The answer is the amount an individual can leave to their heirs without having to pay tax. Flashcard 65. Homeowners insurance. Pause and think of the answer before the reveal. The answer is dwelling, personal property, other structures, loss of use, personal liability, medical payments. Flashcard 66. Policy dollar limits. Pause and think of the answer before the reveal. The answer are the maximum amounts your insurance company is required to pay if your house is destroyed. The declarations page at the front of your policy shows your policy's dollar limits. To receive full payment minus your deductible for a partial loss, such as a hail-damaged roof, most companies require you to insure your house for at least 80% of its replacement cost. Some companies might require you to insure your house for 100% of its replacement cost. Flashcard 67. Coverage for your personal property. Pause and think of the answer before the reveal. The answer is coverage for your personal property such as furniture, clothing, and household electronics as a percentage of the amount of your dwelling coverage limits. Flashcard 68. Texas has 3 standardized policy forms. Pause and think of the answer before the reveal. The answer is HOA, HOB, and HOC. Flashcard 69. HOA. Pause and think of the answer before the reveal. The answer is a named peril policy and provides limited actual cash value coverage of the home and its contents. Only the specific types of damage listed in the policy are covered: fire and lightning, sudden and accidental damage from smoke, windstorm, hurricane, and hail, explosion, aircraft, and vehicles vandalism, and malicious mischief riot and civil commotion theft. This type of coverage offers no water damage coverage at all, unless specifically added through endorsement. Flashcard 70. OB. Pause and think of the answer before the reveal. The answer is the most common homeowners policy, providing replacement cost coverage for most types of damage to the real property except claims specifically excluded in the policy language. These policies provide actual cash value coverage for personal property unless endorsed to provide replacement cost coverage. These policies cover all risks as well as the named perils. Flashcard 71. OC. Pause and think of the answer before the reveal. The answer are the most expensive types of homeowners policies and also, not surprisingly, provide the most extensive coverage of all of the policies. Flashcard 72. Endorsements. Pause and think of the answer before the reveal. The answer is essentially any change that a homeowner would make to their policy. Further coverages to any of the previous policies may be provided through Endorsement S, which allow for modifications on policies. Flashcard 73. CLUE. Report. Pause and think of the answer before the reveal. The answer is the Comprehensive Loss Underwriting Exchange, which is a claims information report generated by LexisNexis Registered, which provides a consumer reporting service. This report contains up to 7 years, usually 5 of a property's claims history, and is a basis for underwriting for homeowners insurance. The report shows the dates of any claims, the loss types, and the amounts paid for losses. The report will also tell if a claim was denied by the carrier. Flashcard 74. Flood insurance. Pause and think of the answer before the reveal. The answer is the most common natural hazard to damage or destroy homes and other structures. According to U.S. government figures, 90% of natural disasters involve floods. Despite this, flood damage historically has been and still is routinely excluded from private homeowners insurance and commercial insurance policies. Flashcard 75. NFIP. Pause and think of the answer before the reveal. The answer is National Flood Insurance Program. Its stated goal is to reduce the impact of flooding on private and public structures. To this end, the NFIP provides affordable insurance to property owners, renters, and business owners, and encourages communities to adopt and enforce floodplain management regulations. The federal agency which administers the NFIP is the Federal Emergency Management Agency FEMA. Flashcard 76. The NFIP has 4 components. Pause and think of the answer before the reveal. The answer is risk identification/assessment, mapping of flood-prone areas, risk mitigation, regulations that communities must adopt and enforce before high-risk areas can participate in the NFIP, insurance, federally supported flood insurance in communities that have joined the program, subsidization and attrition. New properties would be insured at actuarial levels set by the industry because these can account for the newly adopted standards. Flashcard 77. Biggert-Waters Flood Insurance Reform Act. Pause and think of the answer before the reveal. The answer is, in July 2012, Congress passed the bipartisan, named for co-sponsors Judy Biggert, R. Illinois, and Maxine Waters, D. California by a wide margin. The law instituted profound changes during the 5-year period it would be in effect. Structures outside high-risk zones were unaffected, but those within the zones were almost all affected. Flashcard 78. Homeowner Flood Insurance Affordability Act HFIA. Pause and think of the answer before the reveal. The answer is, this law repeals some provisions of the Biggert-Waters Flood Insurance Reform Act BW12 and modifies others. The 7 areas that comprise the overall legislation are recalculation of premiums for subsidized policies, refunds for many who recently paid increased rates, a surcharge on all NFIP policies, liberalized grandfathering provisions, a new protocol for creation of flood insurance rate maps, creation of a flood insurance advocate program, and affordability measures. Flashcard 79. Premium rates for subsidized policies HFIA. Pause and think of the answer before the reveal. The answer is, the new law requires gradual rate increases minimum 5%, maximum 18% to properties now receiving artificially low or subsidized rates instead of immediate increases to full risk rates required under BW12. Flashcard 80. Refunds HFIA. Pause and think of the answer before the reveal. The answer is, the new law mandates refunds of excess premiums some policyholders were charged pursuant to BW12. Policyholders in high-risk areas who were required to pay their full risk rate if it's higher than previously set subsidized rates after purchasing a new flood insurance policy on or after July 6, 2012, or policyholders who renewed their policy after the Homeowner Flood Insurance Affordability Act was enacted on March 21, 2014, and whose premium increased more than 18% will receive prompt refunds. Flashcard 81. Surcharge HFIA. Pause and think of the answer before the reveal. The answer is, in order to offset the losses from repealing parts of BW12 and to ensure solvency of the NFIP, all policies regardless of assessed flood risk will be assessed a $25 annual surcharge for a primary residence and a $250 surcharge for other properties. The surcharge will be eliminated once annual increases on high-risk properties eliminate all subsidized rates. Flashcard 82. Affordability HFIA. Pause and think of the answer before the reveal. The answer is, the new law requires FEMA to prepare a draft affordability framework, which is due to Congress 18 months after completion of the affordability study being conducted by the National Academies of Sciences begun as a part of BW12. In developing the affordability framework, FEMA must consider accurate communication to customers of the flood risk, targeted assistance based on financial ability to pay, individual and community actions to mitigate flood risk or lower cost of flood insurance, the impact of increases in premium rates on participation in NFIP, and the impact of the mapping update on affordability of flood insurance. Flashcard 83. Housing cooperatives. Pause and think of the answer before the reveal. The answer is a type of cooperative often incorporated that owns real property, usually residential buildings. Members, by virtue of owning shares in the cooperative, are granted the right to occupy one of the units in the building. Since the resources of each member are pooled, the buying power of the organization leverages, which lowers the cost to members for services and products associated with home ownership. Members can also control who can occupy units in a cooperative-owned building. Flashcard 84. The condominium concept. Pause and think of the answer before the reveal. The answer is, with the introduction of the concept of the condominium, it became possible for an individual to own airspace. Specifically, the individual is purchasing ownership of the space described by the boundary of a set of walls. The walls themselves may or may not be included in the individual's ownership, depending upon the terms of the condominium agreement. This is the second key characteristic that distinguishes the condominium from other forms of property ownership. The owner of a unit also owns an undivided interest with other unit owners in the common elements, and that interest cannot be separated from the unit. Flashcard 85. Napoleonic Code of 1804. Pause and think of the answer before the reveal. The answer is, this statute allowed individual ownership of individual floors within a building, and imposed joint responsibility for maintenance and repair of common parts of the building, exterior walls, gardens, etc., on all individual owners collectively. Flashcard 86. Common law basis for the condominium concept. Pause and think of the answer before the reveal. The answer is, the fundamental basis for the sharing, management, and maintenance of property for the benefit of all concerned lies within basic real property doctrines such as covenants running with the land and equitable servitudes. William P. Sklar-esque. Concept of condominium ownership, 1995. Flashcard 87. Covenants that run with the land. Pause and think of the answer before the reveal. The answer is, a covenant is a binding agreement generally attached to a property, such as a restrictive covenant. These are very common in housing developments and condominium communities. Homeowners associations (HOAs) also generally include what are called CC and RS, which stands for covenants, conditions, and restrictions. Flashcard 88. The condominium concept is applied in the U.S. Pause and think of the answer before the reveal. The answer is, prior to adoption of the condominium concept in the United States, numerous cooperative ventures were established in all areas of the country. Many factors, primarily economic in nature, conjoined to turn most of these ventures in the early 20th century into failures. It should be noted that just as with all other real property law, each state has its own rules and regulations regarding condominiums. Despite the application of several federal laws to condominium practice, there are no federal condominium laws. Flashcard 89. The Uniform Condominium Act UCA. Pause and think of the answer before the reveal. The answer is has worked for the improvement of state laws by drafting uniform state laws on subjects where uniformity is desirable and practicable. It is a non-profit unincorporated association composed of state commissions on uniform laws from each state, the District of Columbia, the Commonwealth of Puerto Rico, and the U.S. Virgin Islands. The UCA, like all uniform laws proposed by the ULC, is in fact neither an act nor a law. The ULC is not a legislative body. Rather, the UCA drafts uniform legislative templates from which individual states may draw inspiration or even directly copy and adopt the text and language used. Because the ULC is formed from legislators from all 50 states, many courts will look to these proposed standards for guidance, even where those ULC standards have not yet been adopted by a state, if a state's own laws are ambiguous on an issue. As a case in point, only 13 states have adopted the Uniform Condominium Act into local legislation. Regardless, in cases where state law is ambiguous, the courts may nonetheless look to the UCA for guidance in reaching a decision. Flashcard 90. Condominiums. Pause and think of the answer before the reveal. The answer is, the difference between a condominium and an apartment complex is purely legal. There is no way to know a condominium from an apartment simply by looking at the building. What defines a condominium is the form of ownership consists of single-family dwellings, so-called detached condominiums where homeowners do not maintain the exteriors of the dwellings, yards, etc., or site condominiums where the owner has more control and possible ownership, as in a whole lot or lot line condominium, over the exterior appearance. Flashcard 91. Co-ops. Pause and think of the answer before the reveal. The answer is, a cooperative or cooperative is an organization that is owned by its members and operated for their benefit. Any profit that is produced is distributed among the members of the cooperative. These kinds of organizations are commonly run by an elected board of directors, and the members normally have voting power over the organization's policies and direction. Normally, people become members of a cooperative by purchasing shares. The amount of shares a member holds does not usually affect the value of their individual vote. Cooperatives do not have to be corporations. In order to incorporate, the cooperative must do the following: file articles of incorporation, create bylaws, create a membership application, conduct a charter member meeting. During the meeting of charter members, the bylaws must be voted on, and the board of directors must be elected if they are not named in the articles of incorporation. Obtain any necessary business benefits or permits. Flashcard 92. Agency in real estate. Pause and think of the answer before the reveal. The answer is formed when someone approaches a real estate professional and asks them to provide assistance with the purchase, sale, or management of a piece of real property, such as a house, condo unit, or office building. The relationship that is formed when a person or organization becomes an agent of another person or organization, referred to as the principal, is primarily a relationship of trust, sometimes referred to as a fiduciary relationship. Nearly any professional who manages another person's money or deals with confidential information is considered to be a fiduciary. Flashcard 93. Real estate agents as fiduciaries. Pause and think of the answer before the reveal. The answer is because they provide specialized and expert knowledge, which puts them in a position where they can significantly help or harm their clients. See more on fiduciaries below. Agents and agency are the backbone of the real estate industry. The principal job of a real estate agent is to assist a client with buying, selling, or managing real property. Flashcard 94. Agency. Pause and think of the answer before the reveal. The answer is an area of commercial law dealing with contractual, quasi-contractual, and non-contractual fiduciary relationships that involve a person, called the agent, who is authorized to act on behalf of another to create legal relations with a third party. An agent in real estate negotiates on behalf of the principal, the buyer or seller in the transaction, with the agent for the buyer or seller on the other side. The principal is owed the highest degree of loyalty from the agent. Flashcard 95. General agent. Pause and think of the answer before the reveal. The answer is, this type of agent represents the principal in a broad range of legal matters. Real estate brokers and agents generally do not have this type of agency with their clients for a real estate transaction. The relationship that is a general agency is that between a broker and a real estate salesperson. Flashcard 96. Special agent. Pause and think of the answer before the reveal. The answer is, this type of agent represents the principal for one specific act or business transaction with explicit instruction from the principal. Flashcard 97. Principal. Pause and think of the answer before the reveal. The answer is the party being represented in an agency relationship, also called the client for real estate purposes. The principal grants some amount of authority to the agent and, in turn, accepts some responsibility for the actions of any agents who are representing the principal party. The principal directs the actions of the agent or agents, which is another reason why the principal can be held partially responsible for actions taken by the agent or agents. Flashcard 98. Fiduciary relationship. Pause and think of the answer before the reveal. The answer is someone who is granted a great deal of trust by someone else. Normally, a fiduciary is someone who manages, or at the very least, has a significant effect on, the assets of another person. Bankers, mutual fund managers, accountants, executors of estates, and real estate agents are all considered to be fiduciaries. Flashcard 99. Common law principles and the law of agency. Pause and think of the answer before the reveal. The answer is, common law refers to a judicial system where court decisions are based on the earlier decisions of other courts, rather than legislation. This establishes a precedent that the court uses to determine the proper ruling in a case. The hierarchy of courts means that a common law decision made in a higher court is binding to, and can even overrule the judgment of, a lower court. Common law practices give courts the ability to interpret the meaning of a law or even make a ruling in the absence of established statutes. The principle most often employed in the common law application of the law of agency is he who acts through another, acts himself. This means that a principal is considered to be acting even when represented by an agent. More importantly, this means that the principal is responsible for the actions of an agent. Flashcard 100. Brokerage form substantive communication. Pause and think of the answer before the reveal. The answer means a written communication or meeting with a prospective client that includes a substantive discussion relating to a specific piece of real property. This can also be called substantive dialogue. Flashcard 101. Single agency seller's agent. Pause and think of the answer before the reveal. The answer is, the broker who lists the property for sale or lease is the seller's agent. Generally, this is accomplished through a written listing agreement or contract. A single agent, unlike any dual, transactional, or intermediary agent, owes full fiduciary duties to their client. Flashcard 102. The 4 statutory agency positions. Pause and think of the answer before the reveal. The answer is single agency seller's agent, subagent, single agency buyer's agent, intermediary. Flashcard 103. Subagent. Pause and think of the answer before the reveal. The answer is the broker who represents the owners in cooperation with the listing broker is the subagent. In this case, the subagent is not sponsored by or associated with the listing broker. Under current Texas law, if an agent aids a buyer in a transaction without an agreement to represent the buyer, that agent is a subagent of the seller and must put the interests of the seller first. Flashcard 104. Single agency buyer's agent. Pause and think of the answer before the reveal. The answer is the broker who represents the buyer is the buyer's agent. Generally, this is accomplished through a written buyer representation agreement or contract. Flashcard 105. Intermediary. Pause and think of the answer before the reveal. The answer is a broker, and only a broker, who agrees to represent both the buyer and the seller in a transaction is an intermediary. The broker must act impartially and in good faith and is not allowed to offer advice or opinions to either parties. Flashcard 106. Undisclosed dual agency. Pause and think of the answer before the reveal. The answer is an undisclosed dual agency relationship occurs when an agent has a signed agreement with a seller and just an implied agreement with a buyer. This relationship is illegal because it violates common law duties of loyalty and disclosure, and the requirement for informed consent for all parties involved in a transaction. This can occur almost without trying in certain circumstances, such as open houses where the agent is a contracted agent of the seller, but still interacting with numerous prospective buyers who may not be represented by their own agent or broker. Flashcard 107. Disclosure. Pause and think of the answer before the reveal. The answer is in order to effectively police the actions of an agent, the agent is required to disclose their actions to the principal, as well as any conflict of interest. Flashcard 108. No profit. Pause and think of the answer before the reveal. The answer is there are 3 basic exceptions to this rule. The first is that the agent is allowed to derive a profit in a manner prescribed by the contract. Second, the agent can make a profit if it is secondary to an action that is designed to make a profit for the principal. The third situation in which a profit is acceptable is if the agent discusses and receives permission before attempting to gather the profit. Regardless of how the agent acquires a profit, even if it is accidental, the agent is required to let the principal know about the profit and the circumstances surrounding it. If the agent didn't have prior permission to gather the profit, then the principal has the option to require that the profit be turned over to the principal. Flashcard 109. Broker responsibility. Pause and think of the answer before the reveal. The answer is a broker is required to notify a sponsored salesperson in writing of the scope of the salesperson's authorized activities under the Act. A broker owes the highest fiduciary obligation to the principal and is obliged to convey to the principal all information known to the agent which may affect the principal's decision unless prohibited by other law. A broker is responsible for the proper handling of trust funds placed with the broker and must comply with Section 535.146 of this title. A broker may delegate to another license holder the responsibility to assist in administering compliance with the Act and rules, but the broker may not relinquish overall responsibility for the supervision of license holders sponsored by the broker. Listings and other agreements for real estate brokerage services must be solicited and accepted in a broker's name. A broker is responsible to ensure that a sponsored salesperson's advertising complies with Section 535.154 of this title. Broker must, at a minimum, maintain the following records in a format that is readily available to the Commission for at least 4 years from the date of closing, termination of the contract, or end of a real estate transaction. A broker who sponsors salespersons or is a designated broker for a business entity shall maintain, on a current basis, written policies, and procedures to ensure that a broker or supervisor delegated under subsection E of this section must respond to sponsored salespersons, clients, and license holders representing other parties in real estate transactions within 2 calendar days. A sponsoring broker or supervisor delegated under subsection E of this section shall deliver mail and other correspondence from the Commission to their sponsored salespersons within 10 calendar days after receipt. When the broker is a business entity, the designated broker is the person responsible for the broker responsibilities under this section. This section is not meant to create or require an employer/employee relationship between a broker and a sponsored salesperson. Flashcard 110. Compensation broker responsibility. Pause and think of the answer before the reveal. The answer is: the major form of compensation for real estate agents is commission from real estate transactions. The office policy should state when agents receive commission. Furthermore, the policy should establish the standard commission percentage and how the commission is split between the supervising brokers and any agents who worked on a transaction. Per Section 1101.806 of TREC, there are 3 requirements for compensation. 1. The person held a valid real estate broker's license. 2. The agreement to pay was in writing and signed by the party to be charged. And 3. The broker or salesperson advised the buyer in writing before closing that the buyer should obtain or be furnished with a title insurance policy or have the abstract covering the subject property examined by an attorney of the buyer's choice. Flashcard 111. Procuring cause broker responsibility. Pause and think of the answer before the reveal. The answer refers to situations where a client utilizes the services of more than one broker during the process of transacting a piece of real estate. If the agents are not working together, there can be some confusion over who receives a commission from the transaction. Common law awards the commission to the agent that had the most direct influence on the transaction being completed. Flashcard 112. Benefits broker responsibility. Pause and think of the answer before the reveal. The answer is: most employers offer benefits above and beyond the basic compensation in order to entice employees to work for them. Brokerages will commonly offer benefits to their employees just like any other business. These benefits can include bonuses, employer medical and/or life insurance, vacation, sick, and overtime pay, a profit-sharing program, retirement benefits, and maternity leave. Flashcard 113. Grievance resolution broker responsibility. Pause and think of the answer before the reveal. The answer is: whether the conflicts are between individual agents or between agents and their supervising brokers, the office policy needs to describe how these conflicts are resolved. Flashcard 114. Market brokerage and nature of the brokerage business. Pause and think of the answer before the reveal. The answer is: rules restricting advertising or competitive bidding. The Commission may not adopt a rule restricting advertising or competitive bidding by a person regulated by the Commission except to prohibit a false, misleading, or deceptive practice by the person. B. The Commission may not include in rules to prohibit false, misleading, or deceptive practices by a person regulated by the Commission a rule that 1. Restricts the use of any advertising medium. 2. Restricts the person's personal appearance or use of the person's voice in an advertisement. 3. Relates to the size or duration of an advertisement used by the person. Or 4. Restricts the person's advertisement under a trade name that is authorized by a law of this state and registered with the Commission. Flashcard 115. General liability insurance brokerage and nature of the brokerage business. Pause and think of the answer before the reveal. The answer is: the general liability insurance covers the business. It does not have a property component, and so will not cover any damage done to the building. The party hurt by the bookcases falling on them should be covered by this. Damage to the bookcases would not. Flashcard 116. The 3 big federal laws in this area. Antitrust laws. Pause and think of the answer before the reveal. The answer is: Sherman Antitrust Act, Clayton Antitrust Act, Robinson-Patman Act. Flashcard 117. Sherman Antitrust Act Antitrust Laws. Pause and think of the answer before the reveal. The answer was passed in 1890 and was the federal government's first step towards preventing monopolies and anti-competitive practices. Flashcard 118. Clayton Antitrust Act Antitrust Laws. Pause and think of the answer before the reveal. The answer is of 1914 prohibited particular actions by a business if those actions threaten to inhibit competition, including price discrimination, price fixing, and unfair trade practices. Flashcard 119. Robinson-Patman Act Antitrust Laws. Pause and think of the answer before the reveal. The answer was amended in 1936. The amendment further prevented price discrimination by requiring that sellers not discriminate in pricing when selling to equally situated distributors, if the overall effect reduced competition. Flashcard 120. Federal Trade Commission Act. Pause and think of the answer before the reveal. The answer is: the third major antitrust statute was the Federal Trade Commission Act, also establishing the Federal Trade Commission (FTC). The FTC is the federal agency that is charged with protecting consumers by eliminating fraud and various other unfair business practices. FTC Section 5 is a comprehensive consumer protection act and includes all violations of the Sherman and Clayton Acts, as well as a cross-section of other anti-competitive and deceptive practices. Flashcard 121. Real Estate and Antitrust Laws Competitive Practice. Pause and think of the answer before the reveal. The answer is: the following practices are deemed a violation of antitrust regulations: price fixing where companies agree together to set prices for products; group boycotting where companies agree together to stop patronizing another business to reduce competition; fixing or controlling cooperative splits; competing brokerages agree to set commission splits between agents in a particular multiple listing service; controlling the contractual items in listing agreements; competing brokerages agreeing to control the nature of items in listing agreements; allocation of customers or markets; two or more competing brokerages agree to split up a particular market in order to end competition between their brokerages; tie-in agreements that force customers to use other services with which a real estate brokerage has a separate arrangement. Flashcard 122. Fiduciary relationship. Pause and think of the answer before the reveal. The answer is one in which someone puts complete trust in another person in regard to handling some kind of important task or tasks, usually of a financial nature. An agency relationship is a fiduciary relationship because the principal party has to put complete faith in the agent that is representing and acting for the principal party. Flashcard 123. Duties as counterweight fiduciary duties. Pause and think of the answer before the reveal. The answer is: fiduciary duties can be seen as a counterweight to an agency relationship. As you will recall, under an agency relationship, the principal is responsible for any actions the agent takes. By tying the agency relationship and the fiduciary relationship, it means that an agent who acts contrary to the best interests of their principal has violated their fiduciary duties and, therefore, their agency agreement, as they are not acting as an agent, but as a self-interested party. Flashcard 124. Common law fiduciary duties. Pause and think of the answer before the reveal. The answer is: reasonable care and competence. As an agent, the broker must exercise a reasonable degree of competence and care while conducting the business with which the principal has entrusted them. Obedience: the broker must obey the principal's instructions at all times and act in good faith. The one caveat to this rule is that the broker is not required to perform illegal acts on behalf of the principal. Accounting: the broker is liable to the principal and the state to keep accurate records and copies of all documents relevant to the principal and the transaction. The broker may not commingle funds, which means combine the principal's transaction cash with any of the broker's resources. Loyalty: the broker owes a solemn duty of faithfulness or loyalty to their principal. The principal's interests are always to be placed above those of the agent or broker, or the other agent or broker in a transaction. Disclosure: in this case, the broker or agent owes the principal a full, fair, and timely accounting of all known facts relevant to the transaction. A broker or agent may be held liable for damages for failing to disclose as well. Confidentiality: the agent is under a strict obligation to protect any confidential information provided by the client. Flashcard 125. Accounting Common Law Fiduciary Duties. Pause and think of the answer before the reveal. The answer is trust account management. One of the most sensitive areas of real estate professional trust is the handling of client funds. The two greatest dangers presented that may lead to either intentional or unintentional mishandling of funds and potential censure and litigation are the commingling of funds and the conversion of funds. Commingling is the mixing in any manner of personal or business funds with client trust funds. This can happen without any action of the licensee. In the instance where there are fees or commissions earned that remain in a client's trust account that are not removed in a timely manner, that is commingling. Conversion is defined as the act of using money that does not belong to someone for a purpose which it is not supposed to be used. Flashcard 126. Texas Deceptive Trade Practices Consumer Protection Act DTPA. Pause and think of the answer before the reveal. The answer is the underlying policy of this 1973 Act is to protect Texans from false, misleading, and deceptive business practices and breaches of warranty. To this end, the Act prohibits certain acts and practices that can deceive or mislead consumers. This Act does not just apply to real estate, but to all industry that interacts with consumers. One of the most powerful elements of the DTPA is its mandate to award attorneys' fees in the event a claim is successful. Flashcard 127. Defenders and critics of DTPA. Pause and think of the answer before the reveal. The answer is critics, in particular, have contended that the legislation encourages frivolous lawsuits by those who act on their belief that the legal fees will be covered or a nuisance claim will be paid rather than take on legal costs. The DTPA remains, nevertheless, a formidable consumer weapon. A consumer in the DTPA context may be an individual, partnership, corporation, LLC, or even a state agency. Suits may also be brought in the interest of consumers at large by the Texas Attorney General's Consumer Protection Division and, with the AG's consent, by local county and district attorneys. Flashcard 128. Notice of a DTPA claim. Pause and think of the answer before the reveal. The answer is a consumer wishing to pursue a DTPA claim must provide written notice 60 days or more before filing suit. A broker who receives a notice of a DTPA claim will want to promptly contact a lawyer to discuss a response to the claim. Flashcard 129. DTPA importance for real estate brokers. Pause and think of the answer before the reveal. The answer is the DTPA is intended to make consumers whole when any false, misleading, or deceptive act or statement is the producing cause of damages to the consumer. As a result, the DTPA is one of the most commonly used causes of action by plaintiffs against real estate agents and brokers. The DTPA is frequently used by buyers of residential properties claiming to have been a victim of deception, abuse, fraud, or other injury by real estate agents, sellers, or inspectors. Flashcard 130. A typical real estate claim under the DTPA. DTPA importance for real estate brokers. Pause and think of the answer before the reveal. The answer is representing that goods or services have sponsorship, approval, characteristics, ingredients, uses, benefits, or quantities they do not have, representing that goods are original or new when they are deteriorated, reconditioned, reclaimed, used, or secondhand, representing that goods or services are of a particular standard, quality, or grade, or that goods are of a particular style or model when they are not, and failing to disclose information about goods or services that was known at the time of the transaction if the failure to disclose was intended to induce the consumer into a transaction that the consumer would not have entered into if the information had been disclosed. Flashcard 131. Related to condition of the property, a typical real estate claim under the DTPA. Pause and think of the answer before the reveal. The answer is, in the context of residential real estate transactions, this usually relates to the condition of the property and usually comes from the following: the seller's disclosure notice, the multiple listing service notice, and advertising flyers left at the property. Therefore, it is important that, when a listing agent enters information into the MLS or creates an advertisement, the information is accurate. If the information is inaccurate, a DTPA claim may be pursued. Flashcard 132. A typical real estate claim under the DTPA: real estate agent disclosure and the DTPA. Pause and think of the answer before the reveal. The answer is, a broker or real estate agent may be liable to third-party purchasers of property pursuant to the DTPA where the broker or agent's failure to disclose certain facts constitutes a deceptive trade practice. In order to recover damages under the DTPA for the failure to disclose material information, the plaintiff must show that the information was withheld with the intent of inducing the consumer to engage in a transaction. Flashcard 133. DTPA importance for real estate brokers. What is recoverable under the DTPA? Pause and think of the answer before the reveal. The answer is, consumers who prevail under the DTPA are entitled to recover their attorney's fees, and, if they show the person acted knowingly, they can receive up to 3 times their economic damages. Treble damages. Economic damages are compensation for the pecuniary loss sustained by the plaintiff. Examples of economic damages include costs of repair, loss of use during repairs or due to damage, diminution in value, and out-of-pocket expenses. Additionally, a prevailing plaintiff may recover mental anguish damages. Mental anguish awards are subjective, so the amounts are open to interpretation and may vary widely from case to case. As a result, the size of mental anguish awards has risen considerably in recent years. Flashcard 134. Typical use of DTPA in a claim related to a residential transaction. Pause and think of the answer before the reveal. The answer is, common DTPA claims typically involve a dissatisfied buyer who alleges the seller or listing agent failed to disclose material information or misrepresented information about the house, its condition, the neighborhood, repairs, damage, or other material facts. The claim is most frequently made against the seller, listing agent, and real estate inspector. If one of these parties fails to disclose material information to the buyer or if they misrepresented facts about the property, then the DTPA provides the buyer with a possible means of redress. Flashcard 135. Unconscionable defined typical use of DTPA in a claim related to a residential transaction. Pause and think of the answer before the reveal. The answer is defined as the act of taking advantage of another who is less sophisticated and less informed. This is precisely the act that real estate agents or real estate investors are accused of doing nearly every day in courts across Texas. Flashcard 136. Defenses to DTPA 1-2 DTPA importance for real estate brokers. Pause and think of the answer before the reveal. The answer is, defenses to DTPA claims include 1. The statute of limitations, 2. Contributory negligence. 1. The statute of limitations for a claim under the DTPA is 2 years from the date that the violation occurred or 2 years from the date the plaintiff discovered or should have discovered the violation. This period may be extended up to 180 days if it can be proven that a late filing resulted from the defendant's wrongful conduct designed to avoid or delay the filing, although, as a practical matter, most courts take the view that the consumer should have discovered the illegal act when it occurred and are reluctant to extend the 2-year deadline. 2. Contributory negligence is a stern and rarely applied standard. Historically, the defense of contributory negligence means that a consumer who contributes as little as 1% to the damaging incident cannot claim damages. This is not generally used in real estate cases. It has been replaced in Texas by the so-called 51% rule, a standard that means that, if the complainant contributed more than half to the claimed damaging incident, the claim is invalid. Along with the 51% rule, a standard of comparative negligence has become commonly applied in place of contributory negligence. Flashcard 137. Lack of consumer status, among many others. 3 DTPA importance for real estate brokers. Pause and think of the answer before the reveal. The answer is 3 is a suitable defense if the consumer has inadequate documentation to show the real estate license holder's connection to a harmful incident. Reliance on information from other sources. Texas Business and Commerce Code, Section 17.506 provides a defense for a defendant who relied on information from other sources relating to the particular good or service in question. It is a defense to the award of any damages or attorney's fees if the defendant proves that, before consummation of the transaction, they gave reasonable and timely written notice to the plaintiff on written information relating to the property obtained from another source, that, if the information was false or inaccurate, the license holder did not know and could not reasonably have known of the falsity or inaccuracy of the information. TAR 2502 Notice of Information from Other Sources. Texas Association of Realtors Registered TAR 2502 Notice of Information from Other Sources is one version of this written notice, and is a helpful tool that may be utilized by TAR members when communicating with potential buyers about property conditions or information from other sources. Precautions to minimize claims under DTPA. Being ethical will reduce the likelihood of facing such claims. Among the ethical and practice measures to be taken to make it less likely you will face a DTPA claim are the following. 1. Perform only those activities that are within the scope of a real estate agent. 2. Stay current with any changes in real estate by taking advantage of continuing education opportunities. 3. Memorialize conversations in writing. 4. Have clients initialize changes to documents. 5. Don't admit fault where it may not be the case. Flashcard 138. Recent updates to DTPA law. Pause and think of the answer before the reveal. The answer is, in the 2013 legislative session, the DTPA was amended to clarify a liability exemption for real estate brokerage. A plaintiff is limited in his or her ability to sue a real estate broker or salesperson under the DTPA for an act or omission committed by the person while acting as a broker or salesperson. A plaintiff can, as a result of this legislative change, only sue a broker or salesperson under the DTPA for the following: express misrepresentations of material fact that cannot be characterized as advice, judgment, or opinion, failure to disclose known information in violation of Texas Business and Commerce Code 17.46b24, or unconscionable actions or courses of action that cannot be characterized as advice, judgment, or opinion. Therefore, to make a successful claim against a real estate broker under the DTPA, the plaintiff must establish that the broker's conduct falls into one of the 3 exceptions referenced above. Flashcard 139. Words of caution. Recent updates to DTPA law. Pause and think of the answer before the reveal. The answer is, it is possible that you or a colleague is under the impression that recent legislative changes grants immunity from DTPA claims as long as the license holder restricts his or her activities to those covered by the license. This is not the case. It is true that brokers received an exception from DTPA claims by legislative action in 2013, but there was an exception to this exception. Specifically, a license holder may still be sued under the DTPA for express misrepresentations of material fact that cannot be characterized as advice, judgment, or opinion, failure to disclose known information, or unconscionable actions or courses of action. Flashcard 140. Puffing DTPA importance for real estate brokers. Pause and think of the answer before the reveal. The answer is, misrepresentations that are merely puffing or opinion are not actionable under the DTPA Texas Business and Commerce Code. An example of a statement found to be puffing and, therefore, not actionable under the DTPA is the statement, "The property is superfine." 3 factors are considered in determining whether a representation is mere puffing: 1. The specificity of the representation, 2. The comparative knowledge of the buyer and seller, and 3. Whether the representation relates to a future event or condition. In other words, general adjectives describing the property may be too general to support a DTPA claim. Flashcard 141. As is contract DTPA importance for real estate brokers? Pause and think of the answer before the reveal. The answer is, an as-is clause might bar claims brought under the DTPA. The value of an effective as-is clause cannot be underestimated in Texas, and not just in the context of the DTPA. For DTPA purposes, such a clause, when properly written, provides an affirmative defense, so long as the consumer knowingly and voluntarily signed a contract with such a clause. As a reminder, an as-is clause should be clear, unequivocal, and conspicuous, bold and capitalized. To be safe, it should also expressly reject any duty of disclosure on the part of the seller. Flashcard 142. Rescission under the DTPA. DTPA importance for real estate brokers? Pause and think of the answer before the reveal. The answer is, the DTPA is generally viewed as a way for a wronged party to recover damages, but the DTPA also contains a lesser-used remedy: rescission. Rescission means the contract is cancelled and the parties are restored legally and financially to the position they were in before entering the contract. Flashcard 143. House Bill 2590. Pause and think of the answer before the reveal. The answer is, the new statute adds Business and Commerce Code Section 27.015 relating to providing a remedy for fraud committed in certain real estate transactions. This statute includes any injury a consumer claims involved in the transfer of a title in the kind of transactions covered by the DTPA. It requires that 75% of any penalty recovered in an action brought by a district, county, or city attorney to be deposited in the general fund of the county or municipality in which the violation occurred. The statute became effective September 1, 2015. Flashcard 144. 5 circumstances applying to real estate agents. House Bill 2590. Pause and think of the answer before the reveal. The answer is, there are 5 circumstances under which the DTPA, Sec 17.49c, does apply to the actions of real estate brokers and salespersons in express misrepresentation of a material fact that cannot be characterized as advice, judgment, or opinion, a failure to disclose information in violation of Section 17.46b 2424 concerning goods or services which was known at the time of the transaction. If the failure to disclose such information was intended to induce the consumer into a transaction into which the consumer would not have entered had the information been disclosed, an unconscionable action or course of action that cannot be characterized as advice, judgment, or opinion, breach of an express warranty that cannot be characterized as advice, judgment, or opinion, or a violation of Section 17.46b 2626, selling, offering to sell, or illegally promoting an annuity contract under Chapter 22, Acts of the 57th Legislature, 3rd called Session, 1962, Article 6228A5, Vernon's Texas Civil Statutes, with the intent that the annuity contract will be the subject of a salary reduction agreement, as defined by that Act, if the annuity contract is not an eligible qualified investment under that Act or is not registered with the Teacher Retirement System of Texas, as required by Section 8A of that Act. Flashcard 145. Burden of Proof. House Bill 2590. Pause and think of the answer before the reveal. The answer is, to bring suit under the DTPA, the burden is on the consumer to prove that it was the deceptive act on the part of the real estate broker or salesperson that caused damages. There is a 2-year statute of limitations on filing, tracked back to the time that the consumer knew or should have known of the deception. Flashcard 146. Sec 17.46. Deceptive trade practices unlawful. A B7 House Bill 2590. Pause and think of the answer before the reveal. The answer is a false, misleading, or deceptive acts or practices in the conduct of any trade or commerce are hereby declared unlawful and are subject to action by the Consumer Protection Division under Sections 17.47, 17.58, 17.6, and 17.61 of this Code. B. Except as provided in subsection D of this section, the term false, misleading, or deceptive acts or practices includes, but is not limited to, the following acts. C1. It is the intent of the legislature that in construing subsection 8 of this section in suits brought under section 17.47 of this subchapter, the courts, to the extent possible, will be guided by subsection B of this section and the interpretations given by the Federal Trade Commission and federal courts to section 501 of the Federal Trade Commission Act 15 U.S.C.A. Sec. 4501. 2. In construing this subchapter, the court shall not be prohibited from considering relevant and pertinent decisions of courts in other jurisdictions. D. For the purposes of the relief authorized in subdivision 1 of subsection A of section 17.5 of this subchapter, the term false, misleading, or deceptive acts or practices is limited to the acts enumerated in specific subdivisions of subsection B of this section. Flashcard 147. Sec. 17.506. Damages, defenses. Pause and think of the answer before the reveal. The answer is, in an action brought under section 17.5 of this subchapter, it is a defense to the award of any damages or attorney's fees if the defendant proves that before consummation of the transaction he gave reasonable and timely written notice to the plaintiff of the defendant's B in asserting a defense under subdivision 1, 2, or 3 of subsection A of section 17.506 above. The defendant shall prove the written information was a producing cause of the alleged damage. C. In a suit where a defense is asserted under subdivision 2 of subsection A of section 17.506 above, suit may be asserted against the third party supplying the written information without regard to privity where the third party knew or should have reasonably foreseen that the information would be provided to a consumer, provided no double recovery may result. D. In an action brought under section 17.5 of this subchapter, it is a defense to a cause of action if the defendant proves that he received notice from the consumer advising the defendant of the nature of the consumer's specific complaint and of the amount of economic damages for mental anguish, and expenses, including attorney's fees, if any, reasonably incurred by the consumer in asserting the claim against the defendant, and that within 30 days after the day on which the defendant received the notice the defendant tendered to the consumer. Flashcard 148. Sec. 17.565. Limitation. Pause and think of the answer before the reveal. The answer is, all actions brought under this subchapter must be commenced within 2 years after the date on which the false, misleading, or deceptive act or practice occurred, or within 2 years after the consumer discovered or in the exercise of reasonable diligence should have discovered the occurrence of the false, misleading, or deceptive act or practice. The period of limitation provided in this section may be extended for a period of 180 days if the plaintiff proves that failure to timely commence the action was caused by the defendant's knowingly engaging in conduct solely calculated to induce the plaintiff to refrain from or postpone the commencement of the action. Flashcard 149. Section 535.83 Designated Broker New House Bill 2590. Pause and think of the answer before the reveal. The answer is, the designated broker, at the time of a transaction that is the subject of a lawsuit, is liable under recovery fund claims for civil judgments against business entity brokers, whether or not they are named in the civil action. Flashcard 150. Section 535.53 Business Entity Broker, Designated Broker House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments clarified that a business entity must be qualified to transact business in Texas at all times to maintain an active license. The business entity must notify TREC when it is no longer qualified to transact business in Texas. In addition, the amendments more fully set out the scope of required errors and omissions insurance coverage, clarify that a designated broker may own at least 10% of the business entity through a verified ownership chain in other business entities, and sets out the authorized positions for a designated broker by type of entity to alleviate confusion for applicants. Flashcard 151. Section 735.55 Education and Sponsorship Requirements for Sales Agent House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments align the rule with statutory changes in SB 699, enacted by the 84th Legislature, regarding the number of hours required for continuing education. Flashcard 152. Section 535.45 Certain uses of seal, logo, or name prohibited. New House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments clarify that license holders may not use the seal, logo, or name of the Texas Real Estate Commission TREC to imply they are a government agency or have received special TREC endorsement or status. Flashcard 153. Section 535.4 License Required. House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments clarify the definition of what constitutes showing property in light of the statutory requirement that a license holder must pass a criminal background review prior to licensure. A person must be a license holder to provide access to a property for a prospective buyer or tenant. An open house must be hosted by a license holder. The amendments also set out the circumstances under which a license holder can provide an unescorted person access to a vacant rental property. Flashcard 154. Section 535.5 License Not Required. House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments to this rule removed the ability of an unlicensed person to host an open house and removed the provision regarding selling and buying equitable interests in property. Flashcard 155. Section 535.6 Equitable Interest in Real Property. New House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments create a new rule dealing with equitable interest in property, disclosures, and the circumstances under which buying and selling equitable interests will and will not require a real estate license. Flashcard 156. Section 535.2 Broker Responsibility. House Bill 2590. Pause and think of the answer before the reveal. The answer is, the amendments clarify that a broker must notify TREC when the appointment of a delegated supervisor has ended, except that a newly licensed broker or a broker associate named as a delegated supervisor is responsible to notify TREC if his or her status as a delegated supervisor changes. Subchapters F and G rule amendments were adopted to continue to improve the content and delivery of qualifying and continuing education courses and instructors. Flashcard 157. Fair Housing Act. A brief history. Pause and think of the answer before the reveal. The answer is, on April 11, 1968, President Lyndon Johnson signed the Civil Rights Act of 1968, which was meant as a follow-up to the Civil Rights Act of 1964. The 1968 Act expanded on previous acts and prohibited discrimination concerning the sale, rental, and financing of housing based on race, religion, national origin, sex, and as amended handicap and family status. Emphasis added. Title Roman VIII of the Act is also known as the Fair Housing Act of 1968. Flashcard 158. The Fair Housing Act. Pause and think of the answer before the reveal. The answer is, the original form of the Fair Housing Act prevents discrimination and differential treatment by real estate professionals and financial institutions because of a person's race, ethnicity, or nation of origin protected classes. The original version of the Act made it illegal to do the following on the basis of race, ethnicity, religion, or nation of origin, refuse to rent or sell housing, refuse to negotiate for housing, make housing unavailable, deny a dwelling, set different terms, conditions, or privileges for the sale or rental of a dwelling, provide different housing services or facilities, falsely deny that housing is available for inspection, sale, or rental for profit, persuade owners to sell or rent, blockbusting, deny anyone access to or membership in a facility or service such as a multiple listing service related to the sale or rental of housing. Flashcard 159. Mortgage lender prohibitions, the Fair Housing Act. Pause and think of the answer before the reveal. The answer is, furthermore, mortgage lenders are forbidden from doing the following on the basis of race, religion, ethnicity, or nation of origin: refuse to make a mortgage loan, refuse to provide information regarding loans, impose different terms or conditions on a loan, such as different interest rates, points, or fees, discriminate in appraising property, refuse to purchase a loan, set different terms or conditions for purchasing a loan. This act also makes it illegal to do the following: threaten, coerce, intimidate, or interfere with anyone exercising a fair housing right or assisting others who exercise that right, advertise or make any statement that indicates a limitation or preference based on race, color, national origin, religion, sex, familial status, or handicap. This prohibition against discriminatory advertising applies to single-family and owner-occupied housing that is otherwise exempt from the Fair Housing Act. Flashcard 160. Changes, additions, and amendments, equal opportunity in housing. Pause and think of the answer before the reveal. The answer is, the protections of the Fair Housing Act were extended in 1974 to include sex. In 1988, the Fair Housing Act was amended again to include physical and mental disabilities and familial status, especially when children under the age of 18 are involved. Disability, according to the amended version of this act, includes hearing, mobility, and visual impairments, chronic alcoholism, chronic mental illness, AIDS-related complex and intellectual disabilities that substantially limits one or more major life activities. Likewise, a landlord cannot refuse to make reasonable accommodations in rules, policies, practices, or services if necessary for the disabled person to use the housing. Flashcard 161. Cannot discriminate based on familial status, equal opportunity in housing. Pause and think of the answer before the reveal. The answer is, unless a building or community qualifies as housing for older persons, it may not discriminate based on familial status. In other words, it may not discriminate against families in which one or more children under 18 live with a parent, a person who has legal custody of the child or children, or the designee of the parent or legal custodian, with the parent or custodian's written permission. Housing for older persons is exempt from the prohibition against familial status discrimination if is only for older persons. Flashcard 162. Jurisdiction and enforcement, equal opportunity in housing. Pause and think of the answer before the reveal. The answer is, the Fair Housing Act gave the Department of Housing and Urban Development (HUD) and its subsection the Office of Fair Housing and Equal Opportunity power to enforce this act. The HUD website, www.hud.gov, has information about reporting violations of the Fair Housing Act and the process of responding to reports of a violation. This information is found under Program Offices, Fair Housing Laws and Presidential Executive Orders, and Fair Housing, It's Your Right. Flashcard 163. Later changes, equal opportunity in housing. Pause and think of the answer before the reveal. The answer is, there have been a few recent additions to the Fair Housing Act. The following are requirements for new buildings that were ready for first occupancy after March 13, 1991, and have an elevator and 4 or more units. Public and common areas must be accessible to persons with disabilities. Doors and hallways must be wide enough for wheelchairs. All units must also have an accessible route into and through the unit, accessible light switches, electrical outlets, thermostats, and other environmental controls, reinforced bathroom walls to allow later installation of grab bars, and kitchens and bathrooms that can be used by people in wheelchairs. Flashcard 164. HOPA 55 plus requirements later changes equal opportunity in housing. Pause and think of the answer before the reveal. The answer is, HOPA retained the requirement that senior housing must have one person who is 55 years of age or older living in at least 80% of its occupied units. It also still required that senior housing publish and follow policies and procedures that demonstrated the intent to be housing for persons 55 and older. Flashcard 165. Capital gains tax. Pause and think of the answer before the reveal. The answer is, purchase price plus improvement costs equals base value sale price sale expenses equals profit from sale base value equals capital gain. Flashcard 166. Long-term and short-term capital gains tax. Pause and think of the answer before the reveal. The answer is, capital gains or losses come in two types, long-term and short-term. Short-term capital gains or losses relate to capital assets that were owned by an individual for less than a year. Long-term gains or losses relate to capital assets owned for more than a year. If an individual makes a profit off the sale of a building she owned for 12 years, she would have received a long-term capital gain. Annual long-term capital gains, annual long-term capital losses, equals annual net long-term capital gains, annual short-term capital gains, annual short-term capital losses, equals annual net short-term capital gains. Flashcard 167. Based on net capital gains tax. Pause and think of the answer before the reveal. The answer is, capital gains tax is imposed on an individual's annual net capital gains and an individual's annual net short-term capital gains. The net capital gains are usually taxed at a lower rate than normal income, while net short-term capital gains are taxed at the normal rate for income. Net capital gains are the amount of net long-term gains that remain after accounting for any net short-term capital losses. This amount is found by subtracting the individual's annual net short-term capital losses, if any, from their annual net long-term capital gains. Annual net long-term capital gains, annual net short-term capital losses, annual net capital gains. Another way to structure this formula looks like this: annual long-term capital gains, annual long-term capital losses, annual net short-term capital losses, equals annual net capital gains. Flashcard 168. Interest rates. Pause and think of the answer before the reveal. The answer is, one way to determine the interest rate is to use the following formula. Interest rate equals interest/principal. Interest is calculated in two different ways, simple and compound. The amount of interest that is added is dependent on the way the interest is calculated. Flashcard 169. Simple interest amounts. Pause and think of the answer before the reveal. The answer is, simple interest adds a percentage of the principal to the total amount that is owed by the borrower. The formula for determining the amount of interest added on a simple interest basis is a variation of what we have seen already. Interest equals interest rate x principal. Flashcard 170. Compound interest amounts. Pause and think of the answer before the reveal. The answer is, compound interest is far more complex. The core concept is the same. A percentage of the principal is added to the cost of the loan. What differentiates compound interest is that the principal is effectively increased by the interest that is added when each subsequent calculation of interest is made. The most basic formula for determining the value of a loan that adds interest on a compounded basis like this: FE equals PR x1 plus IN, where FE equals future value, PR equals principal, I equals interest rate, N equals number of times compounded. To determine the amount of interest that is added, we would need to subtract the principal amount from the final value. Amount of interest equals future value principal amount of interest equals principal 1 plus interest rate number of times compounded principal or equals PR1 plus IN PR where equals amount of interest PR1 plus IN equals future value PR equals principal I equals interest rate N equals number of times compounded. Flashcard 171. Annual compound interest amounts. Pause and think of the answer before the reveal. The answer is, the interest on loans are commonly compounded more than once in a year. This requires adding one more factor to the equation. Amount of interest equals principal 1 plus interest rate slash number of times compounded x number of years in the lifetime of the loan principal or equals PR1 plus I slash N and TPR where equals amount of interest PR1 plus I slash N and T equals future value PR equals principal I equals annual interest rate N equals number of times compounded T equals number of years in a lifetime of the loan. Flashcard 172. Amortization factor. Pause and think of the answer before the reveal. The answer is, the amortization factor of a loan or mortgage represents the amount of the loan or mortgage that is paid back in a given interval. The formula for determining the amortization factor is amortization factor equals monthly interest rate x1 plus monthly interest rate number of payments slash 1 plus monthly interest rate number of payments 1, or we can write it a little more simply like this. AF equals IX1 plus IN slash 1 plus IN1 where AF is the amortization factor, I is the monthly interest, N is the number of monthly payments made over the life of the mortgage. Flashcard 173. Monthly installment payments amortization. Pause and think of the answer before the reveal. The answer is, formula, monthly payment equals principal x monthly interest rate 1 plus monthly interest rate number of payments slash 1 plus monthly interest rate number of payments 1, or monthly payment equals principal x amortization factor, or we can write it a little more simply like this. MP equals PRX IX1 plus IN slash 1 plus IN1 where MP is the monthly payment, PR is the principal, I is the monthly interest, N is the number of monthly payments made over the life of the mortgage, IX1 plus IN slash 1 plus IN1 is the amortization factor. Flashcard 174. Amortization tables. Pause and think of the answer before the reveal. The answer is, the point of an amortization table is to show the amount of money that will be required for each payment if the loan is to be paid off in the established amount of time. To determine the portion of the periodic payment that is paid to cover the interest, we multiply the principal balance by the periodic interest rate. Principal balance, x periodic interest rate equals payment to interest. The amount of money paid to cover the principal is found by subtracting the payment to interest from the periodic payment. Periodic payment to interest equals payment to principal. The new principal balance is found by subtracting the payment to the principal from the principal balance. Principal balance payment to principal equals new principal balance. Flashcard 175. Loan discount points amortization. Pause and think of the answer before the reveal. The answer is, discount points are a method offered by lenders to allow borrowers a way to lower the interest rate. Most often, one discount point lowers the interest rate by 1/8 for a cost equal to 1% of the principal. To figure out the degree to which the interest would be lowered, we need to use the following formula. Interest rate number of points x 1/8 equals adjusted interest rate. To determine the cost of the discount points, we need to use a formula that looks like this. Loan amount x.1x number of points equals cost of discount points. Flashcard 176. Total cost of the loan. Pause and think of the answer before the reveal. The answer is, the total cost of a loan is the total amount of money a borrower will pay back to the lender. There are a couple of formulas for determining the total cost of the loan. The first method uses the amortized mortgage payments. That formula looks like this. Total cost of a loan equals amortized mortgage payment x number of payments. The other formula for determining the total cost of a loan looks like this. Total cost of a loan equals principal plus paid interest. To find the amount of money that was paid in interest, we subtract the principal. Flashcard 177. Prorations. Pause and think of the answer before the reveal. The answer is, when ownership of property is transferred, the fees and some of the taxes are actually split between buyer and seller. This happens because taxes and items like homeowner fees are owed on a yearly or monthly basis. At the same time, the seller only owns the property for a portion of the year or month that the taxes and fees apply to. Prorations include not just taxes and homeowner fees, but also utilities, rent, and insurance. Prorations are especially important if the seller has already paid fees or taxes for the year or month. The basic formula for determining the proration of fees looks like this: tax or fee rate x remaining days or months equals tax or fee owed. Flashcard 178. Property taxes and insurance premiums. Pause and think of the answer before the reveal. The answer is, property taxes are based on the assessed value of a home. The more expensive the house, the higher the property tax. Property tax also applies to commercial and industrial properties, but is calculated differently. These costs are often included in the escrow, which is often covered by the mortgage, and therefore will increase the monthly payments. Flashcard 179. Assessment and taxation of real property, property taxes, and insurance premiums. Pause and think of the answer before the reveal. The answer is, the property tax system is the largest source of revenue for local taxing districts. Police patrols, fire prevention, schools, parks, and road maintenance are only a few examples of what property taxes pay for. The amount of property tax that the property owner pays depends on the state. The county assessor, on a yearly basis, determines the property's real market value. Flashcard 180. Real market value RMV and maximum assessed value MAV. Property taxes and insurance premiums. Pause and think of the answer before the reveal. The answer is, real market value RMV is typically the price a property would sell for in a transaction between a willing buyer and a willing seller on January 1, the assessment date for the tax year. To estimate the initial RMV for a property, the county assessor appraises the property using a physical inspection and a comparison of market data from similar properties. Flashcard 181. Property tax liens, property taxes and insurance premiums. Pause and think of the answer before the reveal. The answer is, at the beginning of each tax year, a property tax lien is placed on taxable property. It is removed when the property taxes are paid. This kind of lien takes priority over most other property-based liens. If the taxes go unpaid for too long, the local municipality is allowed to foreclose on the property and to sell it. Flashcard 182. Special assessments. Pause and think of the answer before the reveal. The answer is, when the need arises to make local municipal improvements, for example street paving, installation of storm drains, the funding for those projects comes out of special assessments on property. Paying for special assessments, property owners usually pay their portion of a low-cost improvement less than $100 directly to the contractor or to a public agency that then pays the contractor. If the divided cost of the improvement is significant over $100, property owners can choose to pay the bill or they can let it go to bond. Special assessments are secured with liens against the properties in the improvement district. Failure to pay the cost of an improvement funded with a special assessment can result in foreclosure procedures and the possible loss of property. Flashcard 183. Comparing policies, insurance premiums. Pause and think of the answer before the reveal. The answer is, the formula for this is premium/value * 1000 equals rate. Flashcard 184. The Texas Fair Housing Act is located in Chapter 301 of the Texas Property Code. The Texas Fair Housing laws have the following three specific purposes. Sec 301.B021-3. Pause and think of the answer before the reveal. The answer is, to provide fair housing in Texas, to create a procedure for investigating and settling complaints of discriminatory housing practices, and to provide rights and remedies substantially equivalent to those granted under federal law. Flashcard 185. Complaint and answer. The Texas Fair Housing Act. Pause and think of the answer before the reveal. The answer is: a complaint must be 1. in writing, 2. under oath, and 3. in the form prescribed by the Commission, not later than the 10th day after the date of receipt of the notice, and a copy of the complaint under Section 301.081 F3. A respondent may file an answer to the complaint. The complaint may be filed either with the Texas Workforce Commission Civil Rights Division TWCCRD or with the U.S. Department of Housing and Urban Development HUD. Flashcard 186. Investigation and administrative proceedings. The Texas Fair Housing Act. Pause and think of the answer before the reveal. The answer is an investigation not later than the 100th day after the date the complaint is filed, or, if it is unable to complete the investigation within the 100-day period, shall dispose of all administrative proceedings related to the investigation not later than the first anniversary after the date the complaint is filed. After charges are filed, the aggrieved party has 20 days to exercise their option to take the case to a state district court for a jury trial. If the aggrieved party does not choose to exercise that option, the case automatically rolls over to an administrative law judge (ALJ) for adjudication. The ALJ will then make a recommendation to the TWCCRD of resolution. Penalties can range from up to $10 first violation, $25,000 second violation 5-year period, $50,000 THRD violation 7-year period. Flashcard 187. Attorney General Civil Litigation Texas Fair Housing Laws. Pause and think of the answer before the reveal. The answer is: if the aggrieved party chooses to have a jury trial, the TWCCRD will notify the Texas Attorney General, who has 30 days to file a civil action in state district court on behalf of the complainant. Flashcard 188. Through private litigation, civil litigation, Texas Fair Housing Laws. Pause and think of the answer before the reveal. The answer is: an aggrieved party may bring a private enforcement action in a state or federal district court within 2 years of the stated discriminatory action, and can even be filed if an administrative proceeding through TWCCRD is in process. However, if a conciliation agreement is entered on the complaint or if a hearing begins before the ALJ, the private lawsuit must be terminated. The court deciding this matter can grant injunctions, actual and punitive damages, and any other appropriate equitable remedies. Flashcard 189. Exemptions to the Fair Housing Act. Pause and think of the answer before the reveal. The answer is: there are 7 exemptions to the Fair Housing Act in regard to property transactions and the Act's requirement of non-discriminatory treatment. Single-family dwellings being rented without the use of a real estate professional by a party not renting out more than 4 single-family dwelling units at the time. Religious organizations' private club occupancy standards. The TFHA does not limit the applicability of any reasonable local, state, or federal restrictions regarding the maximum number of persons permitted to occupy a dwelling. Drug conviction, familial status. Mrs. Murphy's exemption is based upon the hypothetical that elderly widow Mrs. Murphy owns a home and would like to rent rooms in her home or a part of her home to specifically chosen tenants. Discriminatory practices in residential real estate is mainly a history of restrictive and exclusionary practices that were slowly undone by efforts that culminated in court decisions and legislation. Flashcard 190. Disparate impact. The Department of Justice. Pause and think of the answer before the reveal. The answer is a legal doctrine under the Fair Housing Act which states that a policy may be considered discriminatory if it has a disproportionate adverse impact against any group based on race, national origin, color, religion, sex, familial status, or disability when there is no legitimate, non-discriminatory business need for the policy. Flashcard 191. The disparate impact rule. The Department of Justice. Pause and think of the answer before the reveal. The answer is HUD established the disparate impact rule in February 2013. Disparate impact is a legal doctrine under the Fair Housing Act which states that a policy may be considered discriminatory if it has a disproportionate adverse impact against any group based on race, national origin, color, religion, sex, familial status, or disability when there is no legitimate, non-discriminatory business need for the policy. Flashcard 192. Redlining the Department of Justice. Pause and think of the answer before the reveal. The answer is a discriminatory real estate practice where financial services are denied to neighborhoods, mainly on the basis of ethnic makeup. The term redlining comes from the practice of marking non-white and poor white neighborhoods with a red line indicating high financial risk. Redlining was not significantly challenged until the implementation of the Fair Housing Act. The efforts to undo the effects of redlining were further supported by laws like the Home Mortgage Disclosure Act of 1975. Some states have outlawed insurance redlining practices, but the federal government has never directly dealt with the issue. Flashcard 193. Blockbusting the Department of Justice. Pause and think of the answer before the reveal. The answer was a process carried out by real estate agents where property owners of a neighborhood, generally all white in or near neighborhoods with growing non-white populations, were pressured to sell their property, which were then sold, usually at greatly inflated prices, to prospective minority residents. This practice was commonly used during the period of time when African American immigrants from the southern states were settling into northern urban centers like Chicago and Detroit. Flashcard 194. Steering the Department of Justice. Pause and think of the answer before the reveal. The answer involves directing prospective owners to purchase property in specific neighborhoods based on their racial, ethnic, religious, etc. background. Steering can also involve willfully underinforming or misinforming prospective property owners about properties they may qualify for in order to restrict their ownership to specific neighborhoods. This practice was most often used to keep neighborhoods racially segregated. The Fair Housing Act, by making it illegal to refuse to sell or rent a property solely on account of race, did a great deal to combat racial steering. Court decisions in the 72nd and 82nd supported these efforts. Flashcard 195. Restrictive covenants. Restrictive covenants. Pause and think of the answer before the reveal. The answer is covenants are contractual agreements that impose limits on homeowners. These limitations could, and often did, forbid people of certain racial/ethnic backgrounds from owning or occupying a property. These kinds of agreements were often used to keep non-white persons from owning property in certain neighborhoods. Upholding and enforcing the legality of the restrictive covenant denied the petitioners equal protection under the law, according to the ruling in this case. Thus, restrictive covenants could no longer be sanctioned and enforced by the court system. The Fair Housing Act of 1968 made restrictive covenants illegal. Flashcard 196. Reporting and collection of consumer information. Fair Credit Reporting Act. Housing credit discrimination. Pause and think of the answer before the reveal. The answer is the FCRA classifies two types of information collection agencies. These are Consumer Reporting Agencies (CRAs) and Nationwide Specialty Consumer Reporting Agencies. Nationwide Specialty CRAs are consumer reporting agencies that compile and maintain information on a nationwide basis within specific specialty categories. These include medical records or payments, residential or tenant history, check writing history, employment history, insurance claims. Flashcard 197. Report when negative decision. Fair Credit Reporting Act. Housing credit discrimination. Pause and think of the answer before the reveal. The answer is any entity, individual, or business which uses information from a credit reporting agency and which reaches an adverse or negative decision with respect to a consumer based on that information must inform the consumer of this fact. The consumer then has the right to receive a full copy of the report. Flashcard 198. Removal of outdated or inaccurate information. Fair Credit Reporting Act. Housing credit discrimination. Pause and think of the answer before the reveal. The answer is, reporting agencies have a duty to remove any information after a certain period of time. Typically, this is 7 years from the date of the adverse action. The exceptions to this rule are for bankruptcies which will remain on a credit report for 10 years. Flashcard 199. Permissible disclosures housing credit discrimination. Pause and think of the answer before the reveal. The answer is, the FCRA is quite specific in terms of the conditions under which it is permissible to share an individual's personal information. The individual must either give consent for the release of information or, in the least, be informed that the information will be solicited if a consent is not required.